What's good, YouTube? I wanted to go over today's trade breakdown. This is Monday, June 9th, 2025. Super clean price action. I think we're finally starting to see the market pick back up in terms of high probability days, because the last week or two has been pretty decent, pretty nice. So the daily isn't much. I mean, we have internal here, external up here, but I didn't really use that to frame this trade or this trade. So first thing I saw, hopping in, fair value gap here. We got order block here. This is an order block because it takes sell side, rebalances an imbalance, and taps into a previous order block, which is pretty sweet. Dropping time frames to the hourly. Look at that, higher time frame imbalance is a lower time frame liquidity pool. And we have something cool here. We got SMT. So this is just adding the confluence to our bullish bias, which is pretty sweet. This is the ultimate dole. And then this is the morning dole. So we'll just do that, and then we can delete this for now. We'll delete this too. We know it's there. So that's pretty sweet. And then in here on the hourly, we got, it's really small, but we got a tiny little gap in there. So we got that, and we had this here, this low. Let's go down to the 15-minute OCD. We actually have something pretty neat. This doesn't get tapped. This fair value gap doesn't get tapped, but it does on ES. So that creates an SMT at this low here. Where's SMT? There's SMT, which is pretty sweet. And then look at this, we sweep into the key level after the liquidity, change in the state, buy side of the curve. So we got sell side, buy side, low resistance liquidity in the form of failure swings, and now we completed the market maker buy model. That's not the point. So SMT there at this low, we take buy side, take buy side, take this buy side as well, take sell side to go higher. So that is a great example of this schematic here. And this is a pretty dope schematic. So we take buy side, take sell side to continue higher. I believe it's the MMXM Traders double purge. I think that was the name. I don't really remember though. So we got that SMT there, which is pretty sweet. And then we drop into the 5. So in order to get long, I would have wanted to wait for the change in the state of delivery. Oh no, because we had a gap here, so an inverse fair value gap, and we could have got long in here. But I went to the 1 because I didn't want to wait for that, because that seemed high, and then the risk to reward wasn't as great, especially with our first target and break-even level being this high here, which was the high on the 15-minute. So 3-minute, same thing, no gaps to inverse, and then the change in the state of delivery would be up here, which would again be too high as the 5-minute. So the 1 is really, I don't love the 1. That was really the only option, especially because we had SMT at the lows as well. So we also had SMT here. If we didn't have this SMT here, I probably would have just used the 5-minute, but this made the 1 high probability for me. And it's actually pretty interesting because the NASDAQ was stronger in the form of not tapping the fair value gap, but it was weaker in the form of this reversal point. So that was pretty interesting, pretty cool observation. Could have entered on the inverse, but I like to wait on the 1 for the change in state of delivery. So I entered in this candle here. I entered about right there, something like that. Stop below. Take profit 1, took 25% off at this first high. Another 25% off of the original position size. Like somewhere in here was like 50% of the hourly wick. 50% of this big wick here. So I guess it's like somewhere up here. And then took final TPs up here at the that ultimate draw, and it was just super clean delivery, building narrative with SMT and liquidity, and then executing. Thanks for watching, and I'll catch you in the next one.